Today's trading sessions were significantly influenced by a slew of economic data that failed to meet market expectations. Despite growth in the GDP of the world's leading economy and consumer demand reports from the third-largest economy, the outcomes did not align with the forecasts. Adding to the mix was the market's concern over potential currency interventions by the country that was formerly ranked third, setting the stage for potentially volatile trading patterns. For those who are regular viewers of our financial reviews, deciphering this mini puzzle of economic indicators involving the world's current and former top economies would have been straightforward. Newcomers to InstaForex financial reviews will also quickly grasp the details. After all, both the currency and the economy of the United States are currently undisputed global leaders. Consequently, the US dollar continues to dominate the forex market. The resilience of the US manufacturing and the consumer demand against aggressive monetary policies has even sparked discussions about an American exceptionalism amid other major global economies. This phenomenon reflects a unique stance of the US in maintaining stability and growth in contrast to its counterparts, underscoring its pivotal role in the global economic arena. It's likely that the forex market will continue to struggle against the US dollar until other global economies start to outperform the United States and until the Fed Reserve provides clearer signals about easing its policies. However, recent developments suggest that the US economic situation is not as robust as previously thought. For example, the latest GDP report revealed that the US economy is beginning to decelerate, with a growth of only 1.6% in the first quarter of this year. This marks a slowdown from the previous rate of 3.4% and falls short of the 2.5% growth anticipated by analysts. At the same time, the GDP deflator, a crucial indicator for the US Fed Reserve that measures price increases, rose by 3.1%, slightly exceeding the forecast of 3%. And this suggests that even as the US economy shows signs of a weakening, inflation continues to escalate. Following a sharp sell-off earlier this week due to the weak business activity indicators, the US dollar has rebounded on the back of more aggressive expectations from the Fed Reserve. And today, its index against a basket of 6 major currencies traded within a bullish range of 105.50 to 106.00 points. However, it's important to note that long positions on the greenback are not entirely bulletproof, and this is evident from the losses it suffered against the euro and pound when they surged in optimistic business activity data from the Eurozone and the UK. In contrast, today brought positive news from Germany and the Eurozone's largest economy. The German Consumer Climate Indicator rose by 3.1% for May, reaching a level of minus 24.2 points, the highest in 2 years. Additionally, income expectations have surged to the highest level since January 2022. Meanwhile, in the United States, the consumer sentiment from the University of Michigan dipped to 77.9 today, falling significantly below the anticipated 79 points. It's important to note that Americans generally refrain from making judgments about the economy which they believe could be greatly influenced by the upcoming presidential elections this year. Currency pairs linked to the dollar index are influenced not only by sentiments within a single country. For instance, yesterday the dollar rose above the 155 mark against the yen for the first time since 1990, and today the pair continues its upward trajectory. As a result, the yen has reached a new 34-year low against the dollar and a 16-year low against the euro. The upcoming policy meeting of the Bank of Japan, set to conclude on a Friday, needs to be aggressively proactive to bolster its currency. However, this is unlikely to happen. The Japanese authorities find themselves in a precarious position. If they do not intervene, breaking the 155 level could trigger a flood of speculators. In fact, markets are on a real-time alert for signs of a Japanese intervention. On the other hand, buying the yen is expected to have only a short-term effect. Meanwhile, the outlook of maintaining low interest rates in Japan, combined with the postponed expectations of rate cuts in the United States, continues to put pressure on the Japanese currency. And today, the EUR-USD pair is also trading within a trend, characterized by increased volatility. And the euro gained strength from a robust data from Germany, breaking through the key resistance level of 1.07 and continuing to trade with the upward momentum within the daily range of 1.0680 to 1.0740. Should the European currency manage to maintain its gains by the end of the day, this could signal a continuation of the bullish momentum for the pair. In this scenario, our analysts anticipate a gradual appreciation in the value of the euro. Regarding the bearish scenario, it would involve the currency pair entering a sideways movement within the range of 1.06 to $1.07 per euro. The upcoming presidential campaign in the United States appears to have added some indecision in the Wall Street's mood. However, this risk aversion in the stock market can more likely be attributed to disheartening first quarter earnings reports from American companies. As a result, the S&P 500 index fell by 0.8% yesterday, and today it continued its downward trajectory within the daily range of 4,990 to 5,020 points. Unlike other assets, Brent oil futures attempted to stabilize around $88 per barrel today, even showing signs of climbing to the upper end of the range between $87.3 and $88.5 per barrel. However, these plans have yet to materialize. Despite this, oil prices seem poised for some upward pressure from buyers. Firstly, suppliers are gearing up for the summer season. Secondly, given the recent sharp reduction in crude oil inventories and their levels reaching near yearly lows, refineries might increase prices. Moreover, geopolitical tensions and low U.S. oil inventories could trigger a bullish scenario for the black gold, potentially driving prices up to around $90 per barrel. Yet, it's important to note that news and information flows remain the most significant drivers of oil prices. Gold prices have made a notable move, shaking off previous consolidation to rise to around $2,345 per ounce. During the American trading session, gold continued to perform well, maintaining its position within the range of $2,316 to $2,358 per ounce, and this behavior likely underscores gold's strong appeal as a safe haven asset, particularly during periods of market uncertainty. This wraps up today's trading on the global market. Stay tuned to InstaForex TV for vital trading insights. If you have any questions or comments, please leave them below. Our experts will respond promptly. Thank you for your attention and see you next time.